Hello, my name is Deb Hall and I serve as the president of the board of directors for a nonprofit sheltered workshop. When you volunteer to serve on a board such as this, the last thing you think will ever happen is that someone would steal from a sheltered workshop. However, theft from sheltered workshops is quite common, with one reason being increased vulnerability due to the lack of internal controls. Corruption among senior executives and embezzlement are the majority of workshop theft. Joining me today is Krista Shelton. She's a trusted advisor and the president and founder of Focused Forensic Solutions, a leading firm in forensic accounting and fraud investigation. I have had recent experience utilizing Focused Forensic Solutions, and our board was very impressed by the speed and depth of their investigation, revealing movements of money that would have never been identified without their services. Together, we will explore the conditions that make fraud possible, highlighting a few warning signs, some best practices, and the essential internal controls necessary to help prevent such incidents. It's our hope that by opening up about our experience, we can equip others with the knowledge and insights needed to prevent similar situations. Thank you for tuning in, and let's get started on this important conversation together. Welcome, Krista.
Thank you so much for inviting me to participate in this. I'm truly grateful for your willingness to share your experience and talk about this really important topic. Occupational fraud is so much more common than most people realize. There are studies that show organizations lose about 5% of their revenue every year due to internal theft. Wow. Nobody ever thinks it's going to happen to them until it does. And when it does, it can be devastating. The average fraud case lasts 12 months before it's detected and will cost the organization $100,000. Wow. And so here's the deal. The individuals who commit this type of crime are often the trusted people within your organizations. It's your executive director. It's somebody in payroll. It's your office manager. It might be the bookkeeper who's been working for you for 15 years, the one that shows up at your family gatherings. And my point is, it's often the last person that you would suspect. As somebody who deals with this every day, I firmly believe that a little bit of awareness, along with some of the tips that we're going to share, can go a long way in helping you protect your organization from internal theft.
Absolutely. So what exactly is occupational fraud?
Occupational fraud is when an employee or a manager steals from a victim organization. It oftentimes will involve some sort of deceit or misconduct and is generally for some sort of financial gain.
So you've talked about the fraud triangle a lot before. So can you explain that?
The fraud triangle consists of 3 different components. There's pressure, rationalization, and opportunity. Okay. And the theory is that all 3 of these are present when fraud occurs. And so this was developed back in the 1940s by a criminologist named Donald Cressy. And he wanted to understand how and why people were able to commit occupational fraud. So he went out and interviewed hundreds of people who were incarcerated for embezzlement.
So, pressure, rationalization, and opportunity. So let's start with pressure. What exactly does that look like?
Pressures are personal financial struggles. So it's unforeseen medical bills, it's drug and alcohol addiction, maybe it's divorce. Gambling addiction is another big one that we see. And the idea is that most people will require some form of pressure in order to commit any sort of criminal act.
Okay, so then rationalization, someone justifying their behavior. Can you give us some examples of that?
Yes, rationalization is all about the mindset. So it's their ability to justify to themselves why it's okay for them to do it. A lot of times it's, I'll pay it back, right? We also see, if an employee doesn't feel like they're getting paid enough, and they'll justify it by saying they deserve it. They deserve that money. It's very interesting because what often happens is after the initial theft is successful, then they continue to steal more funds. And that's because of the opportunity, and that's where greed takes over.
Okay, so opportunity is critical.
Opportunity is the circumstance that makes it possible for somebody to commit fraud or continue to commit fraud. This is the one factor that organizations do have some control over, and we're talking about internal controls. Now, understanding all 3 of these factors is what helps us identify potential red flags and helps mitigate risk, because when all 3 components are present, that's like a breeding ground for bad behavior, and that's what we're trying to avoid. And look, the fact is nonprofits and smaller organizations have a disadvantage in this area because when you're trying to separate responsibilities and you don't have enough employees, then that can make this dangerous situation. The most dangerous situation would be when you have one individual who has access to both your books and to your bank account. And this is when you have to be the most intentional and the most vigilant. And I'll add in there, every investigation that I've been involved in with the 20 years that I've been working fraud cases has all fit into this theory.
So can you give us an example of fraud and how it fit into these factors?
Sure. The largest embezzlement case that I worked when I was a special agent with the Internal Revenue Service was on an individual named Dan. So Dan was one of 3 shareholders in a very successful company located out in Kansas.
Okay.
His company received an IRS notice that they were going through a tax return audit. And so unfortunately for Dan, the auditor noticed some major discrepancies, recognized some indications of fraud, and ultimately referred the case over to the criminal side of the IRS, which is when I got involved. So during the course of my investigation, I determined that Dan caused the company to make false payments. He was just simply writing checks directly from the business bank account to pay for his personal expenses, including things like, paying for his grandchildren's daycare.
Wow.
He paid legal fees for a completely unrelated company that he owned with his brother. He got a brand new kitchen remodel for $45,000. But the main way that he stole from this organization, from his company, was by directing the company to pay for his personal credit cards to the tune of like $60,000 a month.
Wow.
Yes. So here's the fraud triangle. We identified that the initial fraud took place about 10 years prior to this audit. It started with a $500 company check that he wrote to a contractor to repair a leaky roof at his house. And in hindsight, a leaky roof is no joke. If you can't afford to repair it, that's where you get the pressure. Mm-hmm. So Dan took the $500, but he had every intention of paying the money back. Nobody would have been the wiser. That was his rationalization. So here comes the opportunity. Dan was the only owner with responsibility over the financial operations of the company. There was absolutely no oversight between them. They trusted him. And so he got away with it. Mm-hmm. Nobody ever noticed that $500 check, or the next one, or the next one. And his embezzlement not only continued, but it escalated for more than 10 years. Dan stole over $3 million from this company.
Wow.
This was a real case with real victims, and Dan was sentenced to 2 years in federal prison.
So what are we looking for with occupational fraud? What are some examples of that?
There are 2 main types of occupational fraud. There are billing schemes and then payroll fraud schemes. So when we talk about billing schemes, the most common one is when an employee directs the company to pay for personal expenses. It's making false payments out of that business bank account. The second most common billing scheme that we see is invoicing via what we would call a shell company. And so in this scenario, the employee will set up a fake company. There's no legitimate business, there's no employees, but they'll set up a PO box and a bank account. And then they start submitting fraudulent invoices to the victim organization. And what's really interesting is a lot of times we'll see them set up a company in the name of a similar to a legitimate vendor. And so, wow. I mean, if you think about it, would you recognize the difference between, say, like ABC Company Inc. or ABC Company LLC?
Not at all.
And by the way, it is very easy to, create a fake invoice on a computer.
Mm-hmm. So tell us about some of the payroll fraud schemes that you might see.
The most common payroll fraud scheme that we see is falsified hours. And falsified hours are just what they sound like. It's when an employee claims that they worked more than they actually did. This is especially true if the employees are entering manually entering time cards, as opposed to clocking in and out of a computerized system. The second most common payroll fraud scheme is ghost employees. And so a ghost employee refers to somebody on the payroll who does not actually work for the business. And so the subject will set up the company to pay these payroll checks, and it's generally in the name of a friend or a relative who then just cashes the checks.
Wow. So this would probably apply to like employee benefits too, like health insurance?
Yes, it's not uncommon for a perpetrator to set up health insurance policies on friends or relatives. So we see that a lot.
I bet. So Krista, what are some of the red flags that an organization should be looking out for?
In almost 85% of all occupational fraud cases, the subject displays some sort of behavioral red flag. And oftentimes it's multiple. So the three most common red flags are, number one, it's employees living beyond their means. And so this can be demonstrated by somebody driving an expensive vehicle, one that isn't supported by the salary that they have. It's designer clothes, expensive jewelry, renovations on their house. I can't tell you how many times when I worked for the IRS that I would be looking at a tax return where somebody was claiming they earned $30,000 in income, but they're living in $1 million house, right? We call that a clue.
Yeah.
The second red flag is employees having financial difficulties. And this takes us back to that fried triangle. This is what we're talking about when we talk about the pressures. And in the study of Dan, it was apparent that Dan had a gambling addiction. Most of the personal credit card payments that we were seeing were actually cash advances to casinos. And everybody knew that he loved going to the casino. So in hindsight, that was a really big red flag.
Right.
And then the third most common behavioral red flag is employees with control issues. So this is the employee who, refuses to share job responsibilities. They refuse to cross-train with other employees. It's the employee that never takes a vacation. So again, if we look back in the case of Dan, he was the sole owner with responsibility for all the financial operations. When his personal credit card showed up to the business, he specifically directed the office manager not to open those. He was the only one that entered those into the accounting system. Yeah. He's the only one who worked with the accountants to prepare tax returns.
Wow, this makes a lot of sense. So besides identifying red flags, what else could an organization do to protect themselves?
The best way to protect your organization is to set up strong internal controls. When you go to bed at night, most of the time you're locking your door, right? And that's a step that you take in order to prevent somebody from being able to just walk right in your house.
Right.
And so it's the same thing with an organization. And internal controls are all about separating responsibilities. And with the smaller organization, this is what can be really difficult, because if you have fewer employees, you don't have the ability to separate those responsibilities. So the one thing that I highly recommend for any organization of any size is to have somebody other than the bookkeeper or the manager reconcile the business accounts. Have a board member reconcile the account. Teach an employee in a different department how to reconcile that account. And in my experience, most board members are receiving either monthly or quarterly financial statements. You're getting a profit and loss and maybe a balance sheet. Those don't tell you a whole lot of things.
Right.
You have to be able to look at the underlying data. And so again, it's looking at the bank statements.
That makes a lot of sense. Yeah.
I'm telling you, almost every fraud case that I've ever been involved with, the fraud would have been prevented if somebody had just looked at those. This is going to shock you, but people won't steal from you if they think they're going to get caught. So it's all about the perception of detection. And so the number one way to deter fraud from happening within your organization is, again, it's to perception of detection. You want your employees to think that you're looking. There's a study that shows that when bars and restaurants put up a camera on the cash registers, the sales go up. The camera doesn't even have to work.
Right.
But again, it's the idea that the bartenders are thinking that somebody's watching, so they won't steal.
Right.
Can you tell us some of the ways that your board is implementing practices that show that you're looking?
Absolutely. So I do know inadequate management review. It's one of the major flaws in sheltered workshops, which creates that opportunity. It's so critical to hire the right manager, but when you've hired the right person as your manager, it's also critical not to get a false sense of security with them. How are you reviewing your workshop manager? Do you request formal feedback from their staff? Are you talking to guardians for feedback? Be sure you have an exceptional manager review policy in place. As structured as it might feel, it truly is the only way you can give a fair review of your manager, because you as a board, you're not working side by side with that manager. Krista, can you tell us some of the other ways a board can give off the perception that they are looking?
Yes. Ask questions.
Okay.
Right? So if you see something unusual, ask about it. If your board member who's now reconciling your accounts sees something that doesn't make sense, ask about it. And let's go back to Dan for a minute. What if one of those other owners had noticed that $500 check that was paid to that contractor?
Right.
He might have explained the situation, right? Probably would have paid the money back. Do you think he would have ever tried to steal again?
That makes sense, yeah.
So if you know somebody's watching, you don't do it, because nobody wants to get caught.
Right.
Another preventive measure that organizations can take is to implement a fraud policy. And this is really important because it sends a clear message that the organization takes fraud seriously and has a zero tolerance policy for it. It creates a sense of accountability and discourages unethical behavior.
Absolutely.
It can also outline consequences of engaging in fraudulent activity. This could be disciplinary action or termination or even legal proceedings. At the end of the day, it's all about creating a culture where employees feel safe reporting suspicious activity. It's common nature to not want to be the person that's a tattletale. And so,
Sure.
again, you have to create this speak-up culture within your organization. Now, I know you guys as a board of directors have also created a list of tips that you wanted to share.
Yeah, can I highlight a few?
Yes.
Let's highlight a few first. So serving on a sheltered workshop board, it's such an honor, and it truly is one of the most positive volunteer positions as you're helping some of the most vulnerable people in your community. And just that fact alone creates an environment of increased trust between you and the manager and the other members on the board because you're all helping people. So that can be dangerous. Another dangerous element is when you might have a smaller workshop with limited staff. One person or a small team of staff can gain too much power and misuse that power. This is one huge reason why it's critical to never allow nepotism, no matter how justified it may seem. If it was already in place when you joined the board, do not assume that it's okay. And that brings me to another point. One common mistake a board member takes when they join a board, you sit back and you observe the flow of the meetings, you observe how things go, and then you kind of adapt that. Don't go with the flow. Challenge that flow or the business plan. Speak up. One example, if the manager reports that the audit passed, no problems, but never gives an actual audit to each board member, that's a problem. If you're new to serving on a board, you may not know that it is an expectation that each board member receives an actual copy of that audit. So speak up and ask questions. Another tip I want to point out is if the manager begins making requests that distances the operation from the board, those are huge red flags that should be popping up for you. An example, they ask for less board members or to meet less frequently. Another red flag is if their reports become very cookie cutter, or if the manager begins to monopolize the meetings and bring up conversations that are away from workshop business. And if the manager has just the right person to join the board, beware. The manager can have valuable input, yes, on board members, but the board needs to be very diversified with a wide variety of background experiences. So I highly recommend having a subcommittee on your board to have the right candidates to serve as board members. And one more tip. I gotta give you one more. If the manager wants to leave any accounts out of their financial reports, their regular reports, because it's just a savings account, for emergencies only, it's just sitting there, it's not changing in value much, you demand continued reports on every account you have, because that silent account not being reported on is a great way for someone to move large amounts of money without the board's knowledge. So we put together a tip sheet for board members, and there is a link in the description below. The last topic we want to cover is the aftermath. What happens when you catch someone stealing? Krista, what steps should a board take right away when they have discovered a theft?
The very first thing that you want to do is make sure you secure all of your financial accounts. And you want to do this because you want to prevent any additional unauthorized transactions. You know, I also strongly encourage organizations to contact law enforcement. You know, depending on the scale, this could be local authorities or it could even be the FBI. Because what's really scary is a lot of times the individuals who commit this type of crime, if they're not held accountable, they will go to the very next place that they start working and they will start their fraud all over again. You know, organizations should also review their insurance policies. A lot of times there is a theft clause, and so you could get some relief based on the theft that was stolen. And you know, lastly, engaging with experts like forensic accountants can be really, really helpful for you. You know, unlike regular accounting, forensic accountants are, you know, trained to identify fraudulent activity and transactions. And so we specialize in determining theft losses and gathering the evidence and then putting it all together into a report. And those reports can provide a lot of assistance, can be provided for legal proceedings and or your insurance claims.
Absolutely. And when you file a police report, that is for the current theft at hand. But a lot of times that theft has been growing and building over years, kind of like your case you just gave us an example on, Dan. It had started 10 years ago. Mm-hmm. And so going through a fraud investigation that we went through with Focus Forensic Solutions, we were impressed not only by how quickly you were able to retrieve the critical documents and material and the further theft, but it was also pertinent to our losses. You knew all the right questions to ask, where to retrieve needed credit card statements, how to get them quickly, what rocks to pick up and look underneath. The report was so thorough and evidence-based, and that's what was critical. In a criminal lawsuit, you need that evidence-based, and then it becomes an important part of your legal case.
If you find yourself in a situation where you're suspicious, reach out to us at focusforensic.com. We can help you.
Right. Well, thank you, Krista, for your insights. It's been an enlightening session. Do you have any final thoughts for us?
2 things. Number 1, trust your instincts. And number 2, don't trust your instincts because criminals are everywhere.
I love it. So stay informed, vigilant, and be proactive. And until next time, take care.